Okay, Thursday morning, Scott Martin, Michelle McKinnon, Susan and Ashley, all of them together now. Let's start with Michelle, because you have consistently been bullish. Now, we've had a rotten week. We're going to go down today.
Yeah.
You're still saying we're going to go higher a bit later on this year?
I mean, of course, Stuart, 25% tariffs is a big deal. But let's face it, a couple things. Number one, this is a great buying opportunity, and there is a ton of cash still on the sidelines waiting to get in. So that's why I don't think you're going to see a significant pullback here. Number two, yes, 25% tariffs is a big deal. However, China and the U.S. don't want a trade war. And number three, let's face it, Trump likes a strong economy, and at 25% tariffs on all imports of Chinese goods, you're not going to have such a strong economy, and he's not going to have a big economy to campaign on in 2020.
Okay, what do you got, Ash?
Well, Michelle and I were talking about this in the break. There is so much money, a ton of money. On the sidelines. So what's it going to take to get these people in? Because interest rates are still incredibly low. Where do you go to get yield on your money?
True.
Just sitting there on cash, it's not going to do it.
Scott, come into this, please. Do you expect a bounce back next week, for example?
No, not yet. I mean, it depends how the week finishes, certainly, Stuart, but it depends how bad things get negotiation-wise. You know, Michelle's made some good points. I do disagree with her third point, or I would just contest it to the sense that I'm not so sure Trump quite understands that tariffs are bad long-term. I mean, he seems to be pretty confident in them. Yes, that could be part of the negotiation that he's done, but we've already, threatened other countries that are our big trading partners with tariffs, specifically China, or I'm sorry, not China, Canada, when we were dealing with them. So to me, he may not quite understand the impacts long-term that these tariffs have, and I'm worried that if they do get placed, they're going to have a big impact on the S&P.
I think it's going to be a headline-driven market today and tomorrow. Any kind of headline that comes across with any kind of speculation or rumor about these trade talks, that will move the market. What you got, Susan?
Also, 18 of the 30 biggest companies in the S&P 500 say that they have already talked about the possibility of a tariff increase on their recent earnings as well. So how much of this has already been factored in? I would say that, if you are a big company and you have to prepare for the unknowns, this is probably one of them.
Okay, let's talk Disney. They made a lot of money on their theme parks, the big attendance at the theme parks, but even more important is perhaps their future streaming operation. They're going to spend big on it. Michelle, would you buy the stock? There's a tiny dip today. I think tiny dip.
Of course, I love dips, and I love buying opportunities. I'll say this, that it's really hard. I always encourage my investors, if you're going to buy an individual stock, right, you want to buy a small amount because we don't know what's going to happen. But what I also liked about Disney is the fact that their revenue at the theme parks have actually increased. And I think that's a sign of a really strong consumer.
Yeah, that's true.
So if we continue to see that, I think that's really positive.
And the prices.
Yeah, given how much it takes to get in.
It costs an arm and a leg to get in.
Oh, my God. It costs an arm and a leg.
Yeah, I mean, I keep using that expression. I used to take my 6 kids to Disney for a week every year, and it cost a lot. This is 15 years ago.
Can't do it now.
It cost an arm and a leg back then.
Oh, it's like $1,000 now, Stuart. It's insane.
Oh,
plus,
what do you got, Susan?
Well, I just want to talk about streaming because obviously people are still expecting Disney Plus to be introduced at $6.99 a month sometime this year. I think the read is maybe in November at some point. They're expecting 60 to 90 million subscribers by the year 2024. That's Disney's forecast. Don't forget, Netflix has 130 million around the world. But here's the positive on the balance sheet as well. They wrote up their asset, the Hulu stake.
Yeah.
It's a gain of $4.9 billion on paper. Yes, and that's right. They share that with Comcast. But what's, I guess, on the downside, they wrote off their entire holding in Vice Media to zero. That's how much they value it.
In a sharply down day, Walt Disney, the stock, is actually down just a little bit this morning. That says a lot, I think. Check that big board. We were down 200 plus. Now we're down 188. It's still a down day across the board. How about the big tech stocks? I always like to check them because they've been moving recently. They're moving today down. Apple's below 200. Amazon's below 1900. Facebook's below 190. Alphabet's below 1170. And Microsoft is below 125.
Buying opportunity?
I was going to say, Stuart, are you buying more Microsoft today?
If I do, I'll tell you.
Okay.
Good cash flow, have you heard?
Whatever you say. Higher profit at Keurig Dr. Pepper. Does that translate into a higher stock price? Yes, it does. In a down day, they're up by 0.5%. Higher profit at the parent of Coach, that would be Tapestry. And they're buying back some stock. That always helps. And look at that. The stock is up 11%. However, Etsy, the Tchotchke Company, I like to call them. Their sales growth fell short, and they're taken to the cleaners. They're down 8%. That's Etsy. Check the share price of Fox, parent of this company, parent of this network. They made $529 million profit last quarter. The stock is up 2.8%. We'll take that. Oh. Roku, they lost less money. And look at that stock, up 12%. By the way, I'm going to be talking with the chief there at Roku, Anthony Wood. He is on the show today.
Great.
Amazon. They're accused of violating kids' privacy with the Echo smart speaker. You know, Alexa, tell me this, tell me that. Child advocacy groups say that the device improperly records conversations. But it doesn't matter.
Well, they store the data in the cloud even after parents try to delete it. Even if they try and remove it, it hangs out in the cloud. It's a bit spooky. All these devices listening on the kids as well.
And don't forget, we had this story where basically they have these teams around the world listening in and recording your conversations on any Alexa-powered devices anyways. They say it's to improve speech recognition and artificial intelligence.
I don't think no one cares.
Nobody cares.
That's right.
I care.
I don't.
I got rid of my Echo a long time ago because of it. Yes, absolutely.
I would not have one because of this. What, Scott, I don't think most people care about this. Do they?
They don't care. I mean, the lucky thing, Stuart, is that, I mean, there's millions and millions of data, conversations, and everything that's kind of going on. It reminds me, I hate to bring this up, of the '93 disaster movie that was Sliver, where, you know, they have these cameras in everybody's apartment. You guys should watch it. It's terrible. They have these cameras in everybody's apartment. Everybody can see everything, but there's so much data, just like there is at Amazon and Google. It probably really doesn't matter that it's your data versus somebody else's.
I think you should read the book 1984, written in 1948, and it's prophetic. I mean, brilliant stuff. However, I digress. Can we see, please, stamps.com? Now, there's a stock that's been chopped off at the knees, literally. They've been cut in half. They've cut their association with the U.S. Postal Service.
Yeah, they make the software that allows you to print your own stamps.
So
who uses a stamp anymore?
Or the snail mail.
Or the more important thing, if they don't have a contract with the government to make stamps, what does stamps.com do?
Right,
that's a very good point.
I have no explanation for that at all. They've been cut in half, basically.
I'm surprised they're not cut it more.
Okay, well, I'm not quite sure the process of the future for this company.
Well, that's the question.
I don't know. All right. The operator of Hooters, partnering with, wait for it, Beyond Meat. They're going to develop meatless burgers.
All right.
The stock is down 6%. I'm surprised, actually. I thought everything was going towards Beyond Meat and meatless stuff. Hey, Scott, would you be on?
We heard him laughing.
Are you into this? Beyond Meat?
Hey, Scott, you want to come in here? Yeah, it's just kind of beyond comical. I mean, I can't believe that they're actually partnering. I mean, of all the restaurants or companies or whatever you want to call Hooters, that's the one that they're leading off with here. I mean, I know they have other partnerships, but that seems to be like the big news that they're releasing. Here's a quick thing, though. I've heard some people trying this burger. I've seen people have it, and they seem to like it. So, as a meat eater myself, I have made it an interest on my calendar in the next couple weeks to go try some of this stuff.
I should tell everybody that this stock, Beyond Meat, it's up 170% since it went public just a couple of weeks ago. I mean, a few days ago, actually. What do you think? Meatless?
I mean, it had a pretty rough run yesterday. I think it was down 9%. So, I mean, I like the meatless trend as basically a vegetarian myself. I'm happy if I ever go to Hooters and I have an option versus just, you know, the curly fries, which are good. The curly fries are good.
These are great.
I think it's just more telling to other big companies that are not jumping on this vegan, vegetarian trend that they're more in trouble. So if you're a large, big box company and you don't have a healthier option, I think that's more alarming.
But if you look at the metrics, I mean, this has a revenue stream each year of 80 million. It has a valuation of close to 5 billion. Does that equate? I don't know. It's up 170% since its IPO.
It is.
Well said, Scott. Pretty rich. I think that's
and also, guys,
true.
I would like to know that's the only reason I go to Hooters, too, is for the curly fries.
Whatever you say, son. Okay.
Yes.
Cutting it off. 9:40 Eastern Time. Michelle and Scott, thank you very much indeed. All right.